Congratulations. Why am I saying that? Because I've been doing this show since February of 2024, earlier this year, every Friday to show, take a look at this chart, look at this, things going up and to the right. You want your investments to do that. You want your wealth to do that. You want to be paying off your debt, saving money, and preserving your wealth so that you can grow and have a better financial future. Since February, every Friday, I've been saying the dollar is dead. That's what I call this. Why? Because the dollar loses value over time. Take a look at this. I put it up all the time. 99% of the value of the dollar was lost over 100 years. The euro, in just 25 years, look how much was lost. Why? You know this was the case because if you were alive 30 years ago, you may have been able to buy a house for $100,000, and that same house is $1 million. So if you'd taken $100,000 and bought the house, you'd have $1 million asset. If you took the $100,000 and shoved it under your mattress or earned a couple percent, you'd have barely more than $100,000. Okay. Well, it would compound over time, but you get the idea. It's not going to be $1 million or anywhere near that. So this is, every Friday I do it. I call it the dollar is dead. I always have to say my disclaimer is I'm not a financial advisor. I just try to show you what the rich do, which is take their dollars and convert them into assets. Why? Because assets go up over time. And I showed a chart before where the rich have just become wealthier and wealthier, especially in the last 4 or 5 years, because inflation has been so high. And inflation is a tax on you. You know that just a while ago you were getting groceries and other things at much lower prices, and those prices haven't come down. Let's start with inflation. And I'll say every Friday what I'm doing is I've been bookmarking since February. So why did I say congratulations? Well, if you had been converting some of your savings out of dollars into other things like we're going to show you, then those assets have gone up in price and you have become wealthier. That's why I started this channel. Help people get out of debt, help them save, and help them preserve wealth. You might look around, and I know people that make quite a bit of money. Let's say they make $300,000 a year. Some of you might be more, some of you might be less, and they spend $299,999. That, to me, is not a wealthy person because they're spending everything they make. That person's no different than the person making $48,000 a year, spending $47,999. They both end up with $1. Okay, so saving and preserving and growing your wealth, in my opinion, is something you should be focused on. This is the inflation rate. You can see here that inflation around 3%. This is the last year, but let's look at what really happened over time. I always show this because this inflation, 5, 6, 7, 8, 9. Over time, this is just 2021 to 2023. All of this has not gone away. We would need to be back to 0 or less to get rid of this. And you know that because things have gone up and they've stayed up. But of course, most of the media wants you to just look at this and say, well, inflation's not bad. It's only 2 or 3% right now. Sure, but those inflated prices never came back down. Okay, I start off with, what if you just kept your dollars? So these are 3 things we look at. We look at savings rate, and this comes out every month, 0.45, about the same as back in February. 3-month CD, so you take your cash, you put it in the CD at the bank, and 3 months later you get your cash plus a tiny bit of interest. Or a treasury, which is you're buying debt from the government, 4.73. So if you take a look at that, that's barely beating inflation. And of course, in the last couple of years, it was so high, you're nowhere near beating inflation. What does that mean? That means that if you're just holding on to physical dollars in the bank, whatever they may be, those dollars are losing value. You're going to buy less in the future. So you're just literally losing money. Not helpful. Okay. So we'd like to get into, and I will show here, other things you can do with your money and places you can put it. Obviously, if you have money, let's say in a stock account, and you get a statement in the mail or online, it's going to have a dollar value, but you don't have dollars. Remember, if you bought stock, you actually have stock. When you sell the stock, it can go to dollars. So let's talk about chunks of places where you can diversify. That's what I do. I like to look at this particular site because they show a couple things here. Commodities, gold and silver. Look at gold, about $2,700, way up from the beginning of the year. In February is around 2,000. Silver is around 23. It's around 31 and a half. Okay, that's gold and silver. We'll talk about buying those in a moment. Then when it comes to crypto, which some people believe in or don't, I do. I actually have a show all about it. Bitcoin, 76,000, Ethereum, 2,900, both up significantly. Bitcoin's almost doubled since the beginning of the year. So if you had your dollars in the bank and earned 2, 3, 4%, $100 would be $102. Well, if something doubled like Bitcoin, then your $100 would be $200. Okay. You might think, well, buying gold and silver and crypto, that's really difficult. However, I'm going to have a link down below to this site. It's actually a site, my site, and it shows you that you can buy ETFs. What is an ETF? You can go on to Fidelity, Schwab, and you can buy a share of an ETF, and they buy the underlying asset. So in other words, you don't have to go buy physical gold. You can buy. Now, there's advantages and disadvantages to actually holding things like the gold yourself or the crypto yourself. I'm not going to get into that. I'm just going to say that you can very easily go to one of these. I've got a list of Bitcoin ETFs where you buy one of these ETFs, just shares of it, and when you don't want it, you sell it, turn it back into dollars. There's Ethereum ones here, there's gold ones, and there's silver ones. So you can very easily just go into your account, diversify by buying those commodities. Okay, now let's look at Dow Jones and S&P 500, the stock market, which is what I first showed you was a chart of S&P 500. Look over the last year. I've been doing this since February, year to date. Year to date, it's up 16%. Your money would be up 16%. Now, Dow Jones average is 30 stocks. You're probably thinking, I can't buy 30 stocks. Well, again, you can buy an index fund where you buy a share of it and it buys the 30 for you. S&P 500. Let's look at year to date, up 26%. Now, over time, I want to point something out. If we look at the Dow Jones, it says max here. How far back does it go? 1985. Look at how it just goes up and to the right. But notice it has downtimes. It has downtimes. It has up and down, but overall it goes up and to the right. Now, why do I point out these downtimes? It's very important to realize that personally, I don't put money or convert money into things like commodities or stocks or whatever it may be that I think I'm going to need in the short term. 3 months, 6 months, because we don't know where this economy is going. Could lose a job, who knows? Expenses come up. What you don't want is if things start to turn and we do go into a correction, which will happen at some point. Corrections happen, things go down, things go up. You don't want to have to sell your assets to turn them into dollars if the market's down. That's forced selling. So as long as you have money like emergency funds, I have 2 links below, how to create a quick emergency fund, how to extend it, make it last. Because who knows, some of you may have lost your job. I hope not. But that could be happening. It's happening a lot right now. The economy's not that great. Why are assets and things going up? Well, over time, they do go up. And I'm not by far the smartest person in the room. Trust me, I watch and listen to economists, and what they're saying is that more money is being put into the system by central banks, whether it be China or Europe, soon to be the US. And when more money goes into the system, asset prices go up. They think that's going to happen into 2025. And somewhere in 25 or 26, they might start removing money from the system. When that happens, asset prices can come down. So this going up doesn't go up forever. You have to understand that things go up and down and make sure that you protect yourself for those times. And you've got things like cash when you need it the most. But over time, S&P 500, Dow Jones, up and to the right. All right. 2 other things we track. The 2-year Treasury note. That's buying government debt. And the government's paying you 4.2%. Okay. And I'll tell you why we watch that in a second if you haven't seen my show before. 10-year, 4.3. Okay. You lock up money for 10 years versus 2 years. And you're getting 4.3 as opposed to 4.2, which makes sense. But hasn't always been the case. This black line represents when the 2-year and the 10-year are inverted or uninverted. It doesn't make sense logically that if you lock up money for 10 years, you would get paid less than 2 years. That's called an inversion. That's been happening since back in 22. Why do we care? Here's why we care. Because if we look at it on a longer term, these gray areas are times of recession, bad times. If you noticed, right before this bad time in gray, they were inverted. They were below the black line. Before that gray, inverted. Before that gray, inverted. Before that gray, inverted. Before that gray, inverted. Before that gray, slightly inverted. Okay, We've been inverted for a long time. We just came out. Doesn't mean we're going to go into a recession or bad economic times, but a lot of people wouldn't be surprised because that's what sort of the data shows. So be prepared, be careful. That's the only reason I point this out. We don't know what's coming. We just got a new administration. Things will change in the government, but we don't know where it's going to go. Unemployment. Unemployment since 22 was a low of 3.4, has been going up. It was 4.3 recently. Now it's 4.1. So I always like to point out and say, make sure you have emergency money. You never know when you're going to lose. Make sure you're watching your budget. If you watch those emergency videos below, it'll show you and explain how to budget and how to prepare to make your money last. But the rich take their money and they put it into assets. I don't go over assets like real estate. Real estate's an asset, right? Turn your dollars into real estate. We all know that even the last 4 or 5 years, real estate's gone through the roof. I think it's in a boom cycle. I think it will bust and real estate will come down within 12 months, start coming down, and then might be deflated for a while. Who knows? But assets over time go up. Do what the rich do. Thank you for watching. I hope this is helpful. I really just do this video because I want people to get out of debt. That's what most of my channel is about. But I also want to point out that you need to save money and you need to preserve that wealth for you and your family's future. The government does not care about you. Banks do not care about you. It's up to you to take care and take control of your financial future. Have a great day, and I appreciate you watching.